Hi everybody, RJ Baxter here with Real Estate Talk Denver, and I'm here today with a special guest, Marcellus SaenRico with Next Capital Group, which is a Denver-based commercial lending group. And Marcellus is the head of the company, and he's here to talk to us a little bit more about commercial lending. So first of all, Marcellus, welcome to the show, and tell us a little bit more about yourself. How long have you been involved in commercial lending?
Well, RJ, thank you for having me, and appreciate the opportunity to be on your show. I've been in commercial lending for 8 years now. Been in the space, financial sales for 14 years.
Okay.
Found a niche 7 years ago, and then just built around it. And business has been going great. It's busy. The new changes for 2018 have been advantageous for small business lending, especially with the SBA. Small Business Administration.
Okay.
Linda McMahon has made some major which is the chief chairman for SBA.
Okay.
She's made some major changes for what they call Main Street lending. One of the biggest changes is that they raised the limit for loan LTVs on business acquisitions and business refinances up to 90%.
Okay.
The 10% down can come from seller financing, which there's no before it used to be a 2-year term for the seller financing, and now they max it out to a 25-year term to match the same term for an SBA loan. So that's huge. That's a big benefit for anybody looking to buy a business. The other change that they made was the standard operating procedures. They basically cut it down in half. So back in the day, everybody used to cringe, when you talked about getting an SBA loan. And now it's a lot more feasible to get and attain, standard operating procedure, SOP, cut down in half. So you're looking at like 45 days to maybe 90 days, depending on the scenario.
Okay. So what kinds of people can get SBA loans? Who are these for?
Great question. Anybody that wants to own a business now. Before.
Is it for the business itself or for the structure that it's in, or both?
Both.
Okay.
Both.
Okay.
Before getting businesses approved on projections was really hard. So like a startup. If you have a business plan, and it makes sense, and all your data is put together that, can demonstrate a profitable business in the first 3 years, then, and plus you have the down payment, there's a real good chance that we'd be able to successfully secure the financing for your startup.
Okay.
And so, bars, restaurants, properties where you're the owner operator. Those are kind of examples of what we're able to get started on. Garages, So
from my understanding of SBA loans, and my knowledge is kind of limited on how it works, but does it have to be an owner, a business that the owner of the building operates themselves to get the SBA loan?
Say if a real estate company wanted to buy the building that they're operating in, they would be able to do that with an SBA loan, as long as they occupy 51% of the space. And then the rest of it, they can rent it out, et cetera, et cetera.
Okay.
But that would qualify for an SBA loan. If somebody wanted to buy a building and not occupy it, then that'd fall under a different category, for a different type of loan, but not SBA.
Okay, so and these types of loans, this is not just Colorado, because that's Small Business Administration?
Correct.
So
Correct.
It's anywhere in the country people can get these?
Anywhere in the United States, yes.
Okay. So can you help people in any state then, or is it just in Denver or Colorado?
We can lend in all 50 states. We can lend in all 50 states. Pretty much most business types are acceptable. Just kind of depends on what the business is, and we'd have to go out and get into the application, and start the process where, the qualifying process to see, the borrower, if they qualify, credit wise. They have to have at least, we have some lending sources that'll do a 580 credit score. Obviously there has to be a reason, for the credit being where it's at and have an explanation. But there's, we have sources that will lend to, with that credit score. The biggest thing is experience in the business. So either the main principal or main sponsor or a partner has to have experience that justifies, the operation. Who's going to be operating it, how, who's going to make sure that the day-to-day business is going to be carried out.
I imagine so that then the bank knows that they can then repay the debt.
Yeah, right.
Is the reasoning.
Exactly.
Okay. So if they're operating a business or let's say they just started the business, but they have experience in that business before they started that particular business, like let's say they worked for someone in that same line of work for 10 or 20 years and then they ventured out and started their own business, could they then get an SBA loan?
Absolutely.
As soon as they started it?
Absolutely.
Okay.
So length of time, the experience is one of the big factors that an underwriter is going to look at when qualifying a loan, because they want to make sure that the business is going to be successful. So we've successfully funded loans where the main sponsor was not the operator of the business, or they didn't have the experience, but they brought in a GM or another partner that had the experience, and that was able to go ahead and suffice. Check off the box.
So if someone applies for an SBA loan, how long does it take to get one of these loans?
It's a good question. Before it, people would experience like 9-month turn times, and now it's
9 months.
9 months.
Wow.
To close an SBA loan. So like now we're seeing loans closing as quick as 45 days.
Wow, that's a big difference.
Big difference.
Is that with these new changes that are happening, or?
Yes. So depending on the business, the location, the borrower, all the particulars to the deal, you could see an SBA loan closing in about 90 days.
Okay.
And that's realistic. 45 days is perfect. Everybody brings in their stuff exactly when they need it.
Everything falls into line.
Yep.
Okay.
And those types of deals have closed, but a realistic time frame is to expect 90 days.
Okay. So when you say that you can finance the acquisition of a building to have the business in and the business, what does that look like? Is that kind of like a working capital type thing, or operating expenses to help the business run?
It's another good question. So you can buy, if you're purchasing the real estate, we could also include capital for inventory, for working capital, for payroll, for getting staffed. So, as long as it fits within the 90% of loan to cost or loan to value, there's a way that we'd be able to go ahead and structure the financing to cover all the immediate needs.
Okay. What do you mean by loan to cost and loan to value? What does that mean?
So loan to value, obviously it's going to be if there's real estate involved. So loan to cost would be more for a construction loan. So if somebody's doing a startup and some ground up construction, then loan to cost obviously means the total amount for the budget, or the budget for the construction of the project.
Mm-hmm.
So and the same thing, we could go up to 90%.
Okay. So how do you determine how much someone can get to help operate the business if you're looking for help with that part of it? Because you have the cost of acquiring the property, and then if someone within the loan wants to get help with the operating cost of the business, payroll, and the things you mentioned before.
And that's a good question. That's more of an underwriting. Underwriting will determine what they'll feel is acceptable. They're not going to overfund, a working capital piece of the loan.
Is it like a line of credit type scenario, or is it more like the business owner gets a lump sum that then they have to manage that themselves to make sure they know?
It's more of a lump sum.
Okay.
So they'll fund the acquisition, of the business and the real estate if the real estate's involved, and then the working capital will get funded, to the borrower, and the borrower has to, make sure they administer the funds, accordingly. But and the term of the loan is typically a 25-year term.
Well, I was going to ask that too, because part of the operation of the business is paying back the loan, of course. Mm-hmm. So they'd have to make sure that they have enough funds there that they don't run out of money.
And there's fixed rate options. So there's there's lending sources that'll have like 10-year terms, 5-year terms. But a typical SBA loan is going to be, on a 25-year term and it's adjustable rate mortgage. So the rate will adjust whenever prime adjusts. Typically it's tied to prime.
From the very beginning of the loan it adjusts like that? Okay. So a lot of the business owners out there, they might be wondering to themselves, what kind of building could I buy if I want to finance my business and buy a building for the business to be in? What types of properties are available to buy in this program?
That's a good question. So office space, mixed use, industrial.
Mixed use meaning some residential, some commercial?
Or
what do you mean by that?
So mixed use meaning that like if there's an office building and a restaurant on the same
Gotcha.
on the same lot.
Okay. So there's lots of different ways it could be mixed use.
Yep.
So it could be different types of businesses in there, different styles of businesses.
Yes.
Okay. What about if they want to buy, like you see these business condos that they sell? Could someone do that? Like let's say it's a dentist, for example, and they want to put
only if they occupy the space.
Okay.
So if they occupy the space, and that a business condo would qualify for under the SBA guidelines.
Okay. Well, what else do people need to think about if they're looking to acquire an SBA loan?
The biggest thing is the business plan. That's going to be one of the main factors that an underwriter is going to look at first, is the business plan, making sure that it's viable. Does it make sense? And then the next thing is going to be the projections. So, you might want to get with a CPA or an accountant that would be able to help you put together projections for the first 3 years. Again, making sure that this is a viable business and it makes sense. They will not, if the cash flow isn't there, then an SBA underwriter is not going to move forward on the loan.
Okay. Seems like a great option for people that are looking to finance their business, maybe acquire a building as part of that. Can they get an SBA loan without buying a building also?
Yes.
Okay. So it's essentially to help small business owners to get their business going, keep their business going, to help provide financing for that.
So you don't have to own the building or own the space that you're operating in to get an SBA loan. You can get the SBA loan for working capital, for expansion into another location, and still be able to lease that location. So there's a lot of flexibility in utilizing an SBA loan. For growth capital. It can be used for growth capital. Getting working capital for whatever immediate needs you have in the business.
I know a question I was going to ask. I was thinking of this earlier. Is there a loan limit to how much people can borrow on this?
So depending on there's different SBA programs. The one is $5 million. The other one is which is the 504 is $5 million. 7A is 13. I believe they just raised it to $13 million.
Okay, so they can be significant sized loans.
Yes.
Okay, and does it matter what type of business entity the business has, like S Corp, C Corp?
No.
That kind of thing doesn't matter?
It doesn't matter.
Okay, so it could apply to anybody. So you could have a C Corp, for example, with multiple shareholders that could theoretically get this.
Yes.
Okay, so it doesn't have to just be a single sole proprietor.
I don't think sole proprietors qualify under the new SOP.
Oh, really? Okay. So, in other words, let's define what we mean by sole proprietor. So, do you mean a sole proprietor without a business entity?
Right.
Okay. So, but it could be one individual business owner that has, for example, an S Corp or an LLC.
Yes.
Okay.
Yeah, that will qualify under the new SOP, or new standard operating procedures.
Does the business entity have to be in existence for a certain period of time? The entity itself?
No, because they allow for startups.
Okay. So, but the key
it could be a new entity.
Okay. The key being that someone that's involved with the financing and the business has experience in that business.
That's one of the main focuses that the underwriter is going to look at.
Okay. Thanks for being here, Marcellus. We really appreciate you sharing all this information about SBA loans. I didn't know all this information, so it's been really interesting for me to learn about it because we get questions about this kind of thing all the time. So we'll be sure to call you if we have scenarios. We like to end every episode with 3 questions that we ask all of our guests. So I'm just going to go right into it. The first one is, what's your favorite place in Colorado?
Oh, easy. Denver, downtown.
Yeah?
Yeah.
Why Denver?
Just how vibrant it is. It's grown so much. There's so much to do.
Yeah, it is.
I like to people watch. So just go sit down on 16th Street Mall and just, it's amazing just how much people just flow in a couple of minutes.
Yeah.
That's fun.
Are you from Colorado originally?
I was born in Texas, but I moved out here when I was 5. So at this point, I consider myself a Coloradoan.
Yeah. Pretty much a native.
Yep.
Yeah, nice. Okay, the next question is there a book that you'd recommend to our audience?
Yes, so if you're interested in getting into commercial finance or commercial real estate, it's How to Succeed in Commercial Real Estate. It's a great read. I'd say it's the handbook to, understanding what the next couple steps are when you're getting into commercial finance or commercial real estate.
Okay. And then the last question is the most fun one, I think, is if you could have any superpower, what would that be?
It's a good question. To live forever.
Yeah, that'd be a good one. Awesome. Well, thank you again for being here, Marcellus. We really enjoyed having you on the show. And thank you for all of you that are watching the video blog today or the podcast. You can go to iTunes to subscribe. You can go to Spotify and check us out there, or you can also check out our YouTube channel. And once again, my name is RJ Baxter. I'm here with Marcellus SaenRico of Next Capital Group. We're Real Estate Talk Denver. Appreciate you watching and have a great day.